Disclaimer. This content is for educational and informational purposes only. It is not financial, investment, tax, or legal advice, and I am not a licensed financial advisor. The opinions shared in this video are my own and are based on my personal investing journey and experiences. Always do your own research and consider consulting a qualified financial professional before making any investment decisions. Investing involves risk. The value of investments can go up or down and could lose some or all of your invested principal. Past performance does not guarantee or predict future results. Nothing in this video should be interpreted as recommendation to buy, sell, or hold any security. You are solely responsible for your own investment decisions. Hello and welcome to Always Be Investing. Today is Tuesday, July 14th, Day 5. Another $100 goes into VTI. Cooling inflation gave stocks a lift. But the lesson is not get excited. The lesson is stay consistent. Tonight's simple message. One report can move prices, but it should not move the plan. Today's main story. Inflation cooled, stocks rose. June CPI year over year was 3.5%. The S&P 500 today was up just about 0.5%, and the NASDAQ today was up just about 1%. Plain English, prices were still rising, but not as fast as expected. That helped calm investors. Lower inflation can mean less pressure on interest rates. That can be good for stocks. Why inflation matters? Because it affects real life, not just Wall Street. Consumers, they feel it at the gas pump, grocery store, and rent check. Businesses feel it in wages, supplies, shipping, and borrowing costs. Investors, watch it because it can affect interest rates and stock prices. Simple takeaway, inflation news can move the market fast, but that does not mean you can predict it. But it was not just inflation. Today had several moving parts. 1. Inflation report, cooler than expected. 2. Bank earnings. Big banks kicked off earnings season with mostly strong results. 3. Oil and Middle East tensions. Oil rose, which can bring inflation concerns back. That is the real lesson. Markets react to many things at once. Earnings season started. Companies are now showing how business is really going. What are earnings? A company's report card. It tells investors how much money this company made, where growth came from, and what management sees next. Today's beginner lesson? Strong bank earnings may say the economy is still holding up, but one earnings day is not a full investing strategy. Why I keep buying VTI? One fund, thousands of companies. VTI is a broad U.S. stock market ETF. It is not a bet on one headline, one bank, one tech stock, or one inflation report. It is ownership in a wide slice of American businesses. Today, $100. Total, $500. What not to overreact to? Green day, red day, same plan. Do not overreact to one inflation report, one market rally, one scary oil headline, one company's earnings surprise, one day of YouTube hype. The market is noisy. The habit is simple. Another $100 into VTI. Day 5. Total invested, $500. The lesson for new investors? You do not need to predict the news to start. Today's news? Inflation cooled, stocks rose, banks reported, oil moved. ABI response? I invested another $100 into VTI and stayed with the same plan. Consistency beats prediction. Educational disclaimer. Important before we wrap. This content is for educational purposes only. I am not a financial advisor. This is not financial advice. Markets can go down. past performance does not guarantee future results. I am documenting my own investing journey so beginners can learn the process in plain English. Day 5 complete. Total invested, $500.